A very warm good evening to everyone. So let's wait for a couple of more minutes. Let's wait for your peers to join as well, and then we'll start. Sure, Manish, I'll address your concern. Yeah, AY, the reason being the class has not been started yet. We will start in next 1 minute. Good evening, PW. So guys, in the last class, we saw some few things related to financial statement analysis. We completed two of the case studies. In this class, we will be doing the third one. Apart from this, I have got a doubt from Manish, who says, sir, please explain the difference between fixed asset and current asset with example. So Manish, fixed assets are those assets which you are going to use for more than 1 year. Fixed assets are those assets which you are going to use for more than 1 year. And current assets are those assets which you are going to use for less than 1 year. So what are the example of fixed assets? Let's suppose you own a bakery shop, and for billing, you have kept a computer. So this computer you are going to use for next 5 to 6 years at least. In that case, that asset, that is the computer, which you are going to use for more than a year, are your fixed assets. Apart from that, examples of fixed assets could be property, it could be plant, land, it could be machinery or equipments. Example of current assets can be inventory, account receivables. Good evening, RK. Examples of current asset could be inventory, account receivables, advance taken, and all those things. Advances paid would be example of current assets. So Manish, are you clear? Yes, I have not shared the screen yet. That is the reason why it is not visible. Just give me a second. Okay. So let's start. Everyone, every one of you are done with the framework of modeling. Every one of you have prepared this. Are you guys ready so that we can start? So let's start. Let's start. The first equation or the first statement, first entry says us that rupees 12 lakh rupees 2 lakh, sorry, rupees 200,000 capital introduced in the business. Tell me everyone, where should I enter this? Everyone, I need reply from each and everyone. What should be the entry that I should pass? What should be the first entry and the second entry? Very good. GA is correct. In equity, we will use capital introduced. That is 2 lakhs. Which is the next one? Cash flow from financing activity. And that is 2 lakhs. So my asset and liabilities are getting matched. It means that I have entered this correctly. My assets and liabilities are getting matched. It means I have entered this correctly. So what happens when you enter all these entries and at the end, if asset and liability don't get matched, it is a cause of concern, right? So it's ideal to get it matched after every entry. With that, the chances of error are very minimal. Purchase office equipment. Everyone clear with this entry? Every one of you? Are you guys clear with this entry? Perfect. Next, purchase office equipment of rupees 10,000. Equipment have an estimated life of 2 years. So what is this office equipments? These are my fixed assets. So office equipments is worth rupees 10,000. And since I have purchased the office equipment, where will the next entry belong to? Where will the next entry belong to? Very good. Cash flow from investing activities. Cash outflow. Okay. Next, pay to landlord rupees 3,000 as deposit. Also, equipments have an estimated life of 2 years. So I guess we will have to charge depreciation for it. Per month depreciation. We will see about it. Let's mark this. Pay to landlord rupees 3,000 as deposit. Let's do one by one. What is 3,000? It is a deposit. 3,000 is deposit for me. And deposit is an asset. Very good. Very good, GA. Very good, Manish. And if I have purchased assets, that is given deposit, deposit will be the part of investing activities. Next is advance rent for the first month. Which is again 2,000. And this advance rent will be a part of cash flow from operations. Receive rupees 6,000. Yes, yes, Manish, you are correct. Why advance rent is an asset? Why advance rent is an asset? Advance rent is an asset because till the time I have not utilized it, I can take it back from the owner. So till the time I have, so let's suppose PP that I have taken your property on lease, and I got to know from someone that water supply on your property is not that great. Sure, Urvashi, just give me a second. Let me complete this and then I'll share the sheet with you. Sure, sure, PW. How is deposit not CFO? So I have two doubts. One doubt is why advance rent is an asset. And the second doubt is why deposit paid is not CFO and why it is CFI. So why deposit paid I have kept it in CFI is, what is CFI? What is cash flow from investing activities? How will you define cash flow from investing activities? Cash flow from investing activities are those cash flows which are spent or received through fixed assets. And is deposit paid my fixed asset? The answer is yes. Why it is my fixed asset? The reason being the deposit I have given to my landlord or the owner of the property whose property I am using, he will kept it for more than 1 year. That is why it is my fixed asset. And the amount spent or received from fixed asset belongs to cash flow from investing activities. That is the reason why I have kept it in CFI. Got this? Got this, Kevin? Perfect. Why advance rent is an asset? The second question is why advance rent is an asset? So let's suppose PP, I have taken your property on lease. You cleverly sold me your property, but before shifting to your property, I got to know from someone that water supply for your property is not that great. And based on which I decided that I am not going to use that property and I want to cancel the contract. So if I cancel the contract, don't you think you are liable to pay me back that 2,000 rupees that I have paid you? Okay. So who own this 2,000? What are assets? Assets are something that we own. Who own this 10,000 till the time I have not used it? I own this 2,000. So that is why I have kept it in asset. Capital introduced in business can be by the owner. So why isn't it an asset? Actually, we have recorded it in asset. So if you see, it is the part of financing activity and that financing activity is recorded over here. So that it is been reflected in asset side as well, AR. The reason it has been reflected in liability is because a business is a separate entity from its owner. So why is it so? Why we keep capital introduced in equity and that is in the liability side and not asset? Because AR, let's suppose you own. Yes, yes, VG, you will get that recording. Don't worry. So guys, where was I? Yeah, why capital introduced and all together all the equity are part of liability and not assets. After all, everything that business generates as profit belongs to its owner. Then why capital introduced is not in asset side? The reason being, let's suppose AR, the idea behind this is the core idea behind this is the business is a separate entity from its owner. And why in accounting do we need to follow this principle? Why in accounting do we need to follow this principle that business is a separate entity from its owner? Let's suppose AR, I own 5 businesses. I own 5 businesses and I make 50 crores of profit every year. Just an example, I own 5 businesses. I own 50 crores of profit every year. But out of that, 4 businesses are profitable and one is loss making. Out of that, 4 of the businesses are profitable and one is loss making. So if I don't keep all my businesses separated from the owner, will I ever be able to understand that which of the business is loss making? The answer is no. So that is why it is ideally important to recognize that business is a separate entity from its owner, and anything that an owner contributes to its business is nothing but a liability for the business. Life of fixed assets is more than 1 year. So advance rent paid for 2 years. Okay, very good question. Advance rent paid for the next 2 years is fixed assets or not. Generally, advance rent for 2 years is not paid beforehand, but if it is paid, the rent for the next 1 year will be the part of current assets, and for the next 1 year would be the part of fixed assets. You can keep it so. But generally, 2 years advance rent or 5 years advance rent are not paid beforehand. If it is paid for the next 5 years, then you can keep it at fixed assets. Okay. Next, receive rupees 6,000 as 1 year magazine subscription to the monthly newsletter. So you have sold a magazine, and that is why you have received rupees 6,000 as 1 year magazine subscription to the monthly newsletter. Tell me where we will record this. Guys, tell me where will we record this? Okay. Shall will we record this in cash flow statement? Very good, GA. I have received one correct response, that is from GA. Okay. So there will be two entries. One will be advance received for monthly newsletter. Advance received for monthly newsletter. What is the amount? 6,000. And what is advance received for me? If I have received 1 year worth of magazine subscription amount in advance, what is that for me? It is a liability for me. Can I record this as revenue? No. Till the time I have not provided them with the magazines, I can't record this as revenue. Till the time I have not provided them with magazines, I can't record this with revenue. Because who is the owner of this 6,000? The customer is the owner of this 6,000, and that is the liability for me. Everyone getting this? Every one of you getting this? Perfect. Purchase and receive 1,000 books at a cost of 50 per book for a total of 50,000. Paid 50% amount in cash, 50% amount is payable in next 30 days. Tell me where we will record this entry. Where are we going to record this entry? Very good. Inventory. That is 1,000 into 50 books. out of which out out of which payment to some to supplier was worth rupees 50%, and the rest of the amount is payable in next 30 days. BG, I think this is some issue. So here in the class, it won't be appropriate to address your concern. Just give me a second, guys. Let me take a sip of water and I'll be right back. Okay. So VG, I would suggest you to raise a ticket about it, and we will sit one to one and try to address your concern. We will try to understand what actually the problem is, and based on that, we will figure out a solution. It won't be appropriate for me to divert the topic about that on the live class. I hope you understand this. Got it, Vaishali? I'm really sorry, but this is not the appropriate time to address that. I can completely understand your concern. We can sit one to one and have a discussion over it. Next is, by the way, VG, which batch are you from? Next, 50% of the amount is payable. So we will keep accounts payable. Okay. Okay. Don't worry, VG. We will figure it out. We will figure it out definitely. Got this one, guys? Everyone? Everyone got this thing? Spent rupees 2,500 in advertisement. Tell me, where will I keep this? Advertisement expense. Okay. Next, took a loan of 20,000 from bank for working capital. Interest rate is 10% and loan is to be repaid after 2 years. Okay. Okay. First of all, took a loan of 20,000 from bank. Loan will be my liabilities. Loan will be my liabilities. No worries, Swapnil. But make sure you go through the recordings. Next, interest expense. So let me prepare a working note. Okay. Interest rate is 10%. Annual interest expense, because if you remember, Vijay, we discussed in the income statement, in the format of income statement, after gross profit, there was selling and distribution expense, office and admin expense, selling and marketing expenses. So advertisement expense is nothing but marketing expense, right? So advertisement expense is a part of income statement. Principal into interest rate will give me annual interest expense for 1 year. But since this is for 1 month, we have to calculate monthly interest expense. That would be this divided by 12. So this is the monthly interest expense. And and there are two widely used accounting conventions. One is US GAAP, one is IFRS. According to US GAAP, you should keep you should keep interest expense in CFO only. You should keep interest expense in CFO only. But according to IFRS, you have you have a choice whether to keep it in CFO or CFF. So keeping interest expense in CFO only satisfy both US GAAP and IFRS. So let's keep interest expense in, as a part of CFO only. So interest expense, this would be the amount. Similarly, can you calculate depreciation and give me for this year, this month? Can you calculate depreciation and give me the depreciation value for this month by using the same working note? Not the same working note, but the similar working note. Everyone, are you guys trying? Done. Take your time. Give me the value for depreciation of this year. It's no big deal, guys. You will be able to do it in a minute. Depreciation is minus 5,000. I don't think so. Because Okay, positive 5,000 is depreciation. Again, I won't be able to agree with you. I think you are calculating working capital for, sorry, depreciation for 1 year. But I am asking you to calculate working capital for 1 month because the financial statements is just for 1 month and we are making it for 30th April. Yes, PK sir, you are correct. Value of the asset, useful life, depreciation charges per year, depreciation per month is divided by 12. Everyone clear with this? Everyone? Perfect. Okay, let's start. Again, depreciation. I'm sorry, not available to give you answer due to working day. Saturday is also working day. Okay, no worries, no worries, SK, no worries. I can completely understand. Okay, SK. Apart from this, so guys, where would be the other entry for depreciation? Since depreciation is a non-cash expense, it can't be in cash flow statement, right? Think where would be the other entry for depreciation? And you guys are correct. Yes, so one entry is in expense. One entry is already been recorded in the expense part. Where would be the other entry? It would be the contra asset, that is accumulated depreciation. And that would be 470. Got this, guys? Got this one? Everyone? Everyone comfortable with this? Please let me know so that we can move forward. There are few entries remaining. Yes, it's accumulated depreciation. Okay. Okay, okay. So till where, till what time or what point of time were you there, Apurv? Please let me know so that I can guide you further. Have you understood how did we calculated this depreciation expense? Were you attentive till here? Apurv, please let me know. Okay, so you want to know what is depreciation. So depreciation is the reduction in value of an asset due to reduction in its useful life. So you have bought an asset, Apurv, for 10,000 rupees and 1 month have passed since you used that asset. Correct? 1 month has passed since you used that asset. So what would be the value of asset after that 1 month? So in 2 years, you total have 24 months. In 2 years, you total have 24 months. So if I divide this 10,000 into 24 months, 416 rupees or 417 rupees approximately worth of asset you have already used. And remaining part is the depreciation and remaining part is the residual value of the asset or book value of the asset. So yeah, we are paying the interest, right? So we will have to record this in our income statement. The loan amount, that is the outstanding principal of 20,000, will be paid after 2 years. So we don't actually have to put any of the entry for that 20,000 rupees, but we are servicing the debt. We are paying the interest. In that case, we will have to use this. So Apurv, this 417 is how the depreciation is calculated. If you are with me, are you clear with this? Now, what is depreciation? Depreciation is an expense. So the first entry for depreciation is depreciation expenses of 417 rupees. Now the question is, where will the next entry go to? Since depreciation is a non-cash expense, this entry cannot go to a cash flow statement, because why? Depreciation is simply a non-cash expense. And if depreciation is a non-cash expense, what will it lead to? It will lead to reduction in the value of asset. So that is why I have subtracted 417 rupees from this 10,000 rupees to calculate my total asset. And the header under which I have subtracted it is accumulated depreciation. Now, are you comfortable, Apur? Bank loan is already recorded as a liability if you see KG. Okay, what about that? What about that sheet, AM? You want the sheet, right? I will share the sheet. I will share the sheet. Don't worry. It's not opening. So please raise a ticket about it. Someone from the team will get in touch with you and try to help, and they will help you out with this. I don't know why it is not opening, but it should get opened. Sure, sure. Let me just get done with this sheet and I will share the sheet. Okay. I would have shared it here itself, but I will have to close this sheet. Otherwise, I won't be able to share it. Sell for cash 50 books. Sure, sure. In the end, I'll share it. Sell for cash 50 books at rupees 100 each book. Revenue or sales has been recorded. Of what amount? 50 books are being sold at rupees 100 each book. So 5,000 is the revenue. And here nothing is given that it will be paid after 1 month or something. So I assume that it is being paid to me here itself. Payment received from customers. So I will assume that this is a cash receipt. Payment received from customers. Now, what is the next entry? COGS, cost of goods sold. 50 books has been sold. What was the price at which it was purchased? It was purchased for 50 rupees. So 2,500 is the cost of goods sold. in inventory, we will have to less the inventory sold. So that becomes my 2,500. And here my balance sheet is getting matched. Everyone clear with this? Everyone clear with this selling entry or sales entry? Shall we start? Shall we go to the next part? Perfect. Okay, one more time. Sure. Let me remove these two entries and this one. So, okay. So if you see, sell for cash 50 books at rupees 100 book, 100 each book. So what is the sale value and what is the revenue that I should record? It is nothing but simply 50 into 100. This is the sale value. Correct, K? Yeah, are you getting this? Are you clear till here? Please let me know so that I can move ahead. Okay. So revenue is recorded. There is nothing being mentioned. It is a credit sale or something. So I will assume that it is a cash. It is a cash sale. I will assume that this is a cash sale. Sure, Manish, but let me just get done with this and then I'll come to that. Okay, so this is my revenue. This is my revenue. Now, if this 5,000 worth rupees of books have been sold, there would be an amount that I have spent to purchase these books, right? There would be an amount I have spent to purchase these books, and that amount is nothing but my cost of goods sold. Correct? So how can I calculate that cost of goods sold? It was 50 rupees. Can you see 1,000 books purchased at rupees 50 per book? So 50 rupees into 50 because I have sold 50 books at rupees 100 and I purchased those 50 books at rupees 50. So that gives me my cost of goods sold. Now this cost of goods sold, this 2,500 rupees worth of inventory, so should be reduced from my inventory. Okay, are you getting this? If I don't deduct this and if I look into my balance sheet, it will show me the inventory of 50,000. But when I actually do my stock audit, I will find that the inventories are worth only rupees 47,500. So it is essential for me to record that this 2,500 of inventory has gone out of my go down. So that is why we are recording this. Going to next. Sell 25 books at rupees 100 per book. Revenue 2, 25 books into 100 per book. Payment will be received in 30 days. Accounts receivable. That is 2,500. COGS would be 25 into 50. So just to give a breakup, KG, that why I have recorded 2 times revenue, just to give a breakup that from which parts revenue has been recorded. So there are 2 entries. That is why to make you understand, I could have simply used 50 into 100 plus 25 into 100 over here. And that is the ideal way to do it. But so that you guys don't get confused and many of you don't get confused, I am giving the breakup of each and every entry to make you understand how it actually works. Okay. At the end, what you can do is you can summarize all the revenue, summarize all the COGS into under one statement or under one header. Okay, KG. Have you got this so that I can move ahead? Where would be the next entry of COGS? It would be under, again, inventory sold worth rupees 1250. Hire a part-time clerk to whom company will pay rupees 100 per hour. Clerk works for 25 hours before 30th April 2019. 50% amount is paid, 50% is payable. So salary expenses is what I will have to pay to my clerk. 100 rupees into 25 hours, 2,500 is the amount that need to be paid, out of which 50% is paid. Salary paid, and that is 50% of this. The rest is salary payable, which is liability to my business. Now my balance sheet is not getting matched, and why? Let's see why. Salary expenses 2,500, salary payable. Payable does not come in negative sign. I'll have to keep it positive. And yes. So this is how check line helps. This is how making the check line in advance help. So if we would have completed this and at last we would have made the check line, we would have to tally each and every line item again and again. That is why this trick is very important to understand that how the financial statement actually flow. Done. Everyone have, are you guys clear till here? Please let me know. Guys, are you done? Next, mail out the first month's newsletter to the customer. Mail out the first month's newsletter to the customer. Where we will record this. The total advance taken for 12 months of newsletter was 6,000 rupees. The total advance taken for 12 months of newsletter is 6,000 rupees. Okay. So since I have mailed 1 month of newsletter, I can record that as my revenue, because since I have mailed, now it's sold. I can record it as my revenue, because if he will be asking me back for my money, he can't ask me for 6,000 now. What he is going to ask me is 5,500 only. And that is why I will reduce this advance received with revenue recorded, and that would be minus 500. And I am done with this. Everyone enjoyed this? Everyone, are you guys clear till here? Here I am ready with my last entry once again, sure. So this, mail out the first month's newsletter to the customer. The subscription had been sold on 13th April 2019. So on 13th April 2019, you see 6,000 was received in advance. 6,000 was received in advance for the next 12 months of newsletter, out of which the newsletter for first month is already been sold. The newsletter for the first month is already been sold. Okay. And if newsletter for the first month is sold and provided, you can record it as revenue. You can record it as revenue. So TM, how it goes is like you have given me 6,000 in advance for 12 months of newsletter and I have provided you with 1 month of newsletter. So 1 month of liability is being paid off by me. That is why I'm recording 500 rupees as revenue. 500 rupees as revenue. And since I have provided you with 500 rupees worth of newsletter, now you can't ask me 6,000. What are you going to ask me? You can only ask me with 5,500. That is why I have subtracted this 500 from this 6,000. That is why the revenue advance received for revenue is only 5,500 now. That is why this has been subtracted. So you want me to give entry for 20 and 21st April once again? Sure. In 20 April, sale for cash, 50 books at rupees 100 book. So 50 books had been sold for rupees 100 per book and payment is received. Payment is received for this 50 books. So that is what we have modeled it out, KG. If you remember the last class, we have done our financial modeling in such a way. We have interlinked our financial statements in such a way that after every entry, this is going to match. Down without affecting the formula. I will tell you, Kevin. Just give me a second. Let me just get done with this 2000 next. Are you clear with this revenue part? Are you clear with this revenue part? Someone asked me, right, about 20. Arjun, are you clear with this revenue part? Please let me know so that I can move to COGS part. Perfect. Now, to buy this 50 books, it costs me around 50 per book, right? I sold it for 100 per book. So that is why revenue is 100. But at what cost did I buy it? What is the cost that incurred to me for selling those goods? So 50 into 50, correct? I bought it for 50 rupees. That is why I have recorded 50 into 50 over here. 50 for number of books and 50 is for the price. Okay, that is cost of goods sold for me. Arjun, are you clear? Arjun, are you clear with this? Now it's also essential for me to subtract this 2,500 worth of inventory outflow from my balance sheet. And that is why I have subtracted this 2,500 worth of inventory outflow from my balance sheet. Have you guys got this? Everyone? Have you guys got this? Perfect. Similarly, revenue 2, just that if it is very much same for 20th April and 21st April, the entries are very much same. It's just that 2,500 over here, 2,500 over here is coming for accounts receivable because the payment is due in next 30 days. The customer is going to pay me in next 30 days. That is why this 2,500 is coming in accounts receivable and not in cash flow statement. And that is the only difference. Rest everything is same. Can you please show how to interlink financial statement for automatic tally? Sure, KG, I'll show you that. Don't worry. Let me just share this sheet. In next example that we are going to do, I will show you that how can you link the financial statement so that it could get tallied automatically. Let me just share this sheet, guys. Is sheet available in the chat box? Guys, are the sheets available in the chat box? Perfect. So let me share you the next sheet as well. Let me share with you the next sheet as well. That we are going to practice today. Yes, perfect. So yeah, based on that bank loan that is to be paid after 2 years, based on that only we have calculated the interest expense, right? So it definitely holds a significance. If you won't have the principal amount, how you are going to calculate the interest expense? Apart from that, Kevin, did you ask something else? How do you move the cells down without affecting the formula? Okay. So Kevin asked me a doubt that how did I moved the cells without affecting the formula? So rather than using control C and control V, I use control X and control V. So control X is for control copy, sorry, control cut and control paste. And I have not used control copy and control paste. Instead, I have used control cut and control paste. Just give me a second. Just give me a second. Now, if I use this formula, control C and control V, my values in terms of relative referencing will is definitely going to change. You can see. But what I did is I didn't use control C and control V. I used control X and control V, and wherever it may be, wherever I paste this, the formula's reference won't change. Getting this? This is what I did. Perfect. I have shared the second sheet with you guys. Please open that sheet. I have shared the second sheet with you guys. Please open that sheet. Not received? Okay, just give me a second. It's strange actually that you have not received the sheet yet. Check now. I have shared both the sheets again. Please check. Also give me a moment. Let me get it uploaded on LMS here itself. In the chat box. So PP Pooja, have you joined through mobile? Have you joined through mobile, Pooja? Probably that might be the reason you have not received. If you might have joined through the laptop, you might have received it. But don't worry, if you have joined through the mobile, I'll get it uploaded on. Your laptop is not working. Okay, that is perfectly fine. I think there is some issue with Zoom mobile application that sheets uploaded does not seems to be appear over there. Just give me a second. Let me also get it uploaded in the LMS now itself. Otherwise, there are many chaos. Meanwhile, before starting with the next sheet, guys, everyone of else has received the sheet, right? Everyone of else, guys, you have received the sheet, right? Okay. So let me just check that sheet. Okay. Okay. So let me share my screen. Done. So how this sheet is different from the other sheet is till now KG. So there would be notes section or financial statement analysis section over there. You will be able to find these sheets. So guys, please concentrate. Till now, we have seen that the company is newly incorporated and we don't have any past financial statement. But this time we have been given the closing balance sheet of financial statement. Why we have not been given the data about income statement and cash flow statement? Think about it. And this is the data. These are the financials for the last year, and based on that we have to incorporate these data in our financial statement to accurately reflect the data, and based on this we are going to create the financial statement for this year as well. So before starting with the session, if any one of you want to go on a break, go on a break, but be right back in next 5 minutes. Go on a break and be right back in next 5 minutes so that you can start fresh and do a little bit of brainstorming. Perfect. Unable to upload from LMS. I think you are unable to download from LMS. You can raise a ticket about it, and I'll try to. The team will try to help you out. So about anything, any issues related to LMS, you can raise a ticket about it, and the team will try to help you out. Sure, Kriti, I'll share the sheet on chat, but uh, again, I'll have to shut this down. Kriti, can we do one thing? Once we are done with the sheet, then at that time I'll share you this on chat. Okay, okay, you will have to practice it well, right? So let me just share it again. But please don't me do that again and again, guys. The sheet will be uploaded on LMS. You can download it over there as well. So shall we start, everyone? My favorite people. Shall we start? Perfect. File is not getting downloaded. AM. I'm really sorry, but this is something that is issue with only you, I guess. Guys, are you able to download that file? Is that file opening correctly in your laptop or desktop, whatever you may be using? Everyone, please let me know. So yes, AM, I have got few confirmations from GA and few more people that people have downloaded the file. Jyoti, Kevin, people have downloaded the file and they are able to solve that out. If you feel, even PK, Shivangi, everyone is commenting up with a yes, that it means that they are able to download that file. If you are not, I'm really sorry, AM, but please, can you please raise a ticket about it and we will solve this issue. But make sure that this is a technical issue so that technical team will get in touch with you and they will try to help you out. Okay, AM, have you got this? Shall I start, AM? Soumya, you might have joined late. And if I'm not wrong, you have joined in last 2-3 minutes, because just a few minutes ago, I have shared the sheet. I know you might be working, but still, guys, please don't make me close this sheet. And now, now can you see the sheet, Soumya? Soumya, can you see the sheet now? I have uploaded it again on the chat box. Soumya, can you see the sheet? Have you joined from the mobile device? So if you have joined from the mobile device, the mobile application of the mobile application of Zoom does not support sharing the sheet in the chat box. So that is why you won't be able to access the sheet if you have joined through the mobile device. And since you have joined through the mobile device, you can access the sheet through LMS. The sheet is not yet uploaded on the LMS, but it will be uploaded soon. Okay, this is my month 0, month 1. Before going on a break, I asked you that why historical data for cash flow statement and income statement is not being given to us. The question is, why historical data for cash flow statement and income statement is not being given to us? Anyone up with the reason why? Anyone? Can you please explain why the historical data for income statement and cash flow statement is not being given to us? Think about it, guys. Think about it. Very good, GA. GA, can you please let me know about a bit about your background, that what have you been doing till now and what are you doing currently? How do you have such a good grasp over the concept? So the question is, why the historical data for income statement and cash flow statement is not been given to us. All the items that has been given over here are the elements of balance sheet only. Very good, SP. Because income statement and cash flow statement get resets every period and it is periodic. While balance sheet is as on date, balance sheet has to carry everything that has been happened in the past, but that is not the case. That is not the case in income statement and cash flow statement. Great, GA, great. Really happy to, as you, since you being the part of the class. Okay, so first of all, before starting with the modeling part, okay, yeah, we can do that as well. But okay, got it. So, guys, what we are going to do is first we are going to see is our historical balance sheet matching or not. First of all, what we are going to do, we are going to see whether our historical balance sheet is matching or not. So let's highlight the elements. Equipment. Equipment is my asset worth 6,000. Trucks are again my asset that is worth 15,000. Accounts payable are my liability. That is worth 2,500. Common stock, one of the part of equity. So here is a cause of concern. We will have to see whether this common stock is inventory, because inventory is also referred as stock sometimes. In fact, most of the times. And share capital, equity share capital is also called common stock. So let's see what is this. Let's keep on equity. And if our balance sheet does not get matched, we will try to see what is the actual issue. Retained earnings. 7,850. Cash. That is worth 5,000. Accounts receivable. $2,000. Prepaid rent. 1,500. Supplies. That is 850. Let's sum this up. 3,350. Let's sum this up as well. 3,350, and my historical balance sheet is getting matched. My total assets is equal to my total liabilities. Perfect. Now, someone asked me that how can we model our financial statement in such a way? How can we model our financial statement in such a way that that after every transaction, our financial statements, that is balance sheet, gets matched exactly? Someone asked, who asked me this, that how can we model our financial statement in such a way that Our balance sheet after every transaction gets matched automatically. Who asked me this? KG asked me this, correct. So shall we start KG with that part? If you allow me to. Let's start with net income. The bottom line of the income statement is net income. So in this net income, the sum of all the values that is been reflected in the income statement will come. Same thing we are going to do for total of liabilities, sum total of all the assets as well. Next, just give me a second. Okay. Okay. This was something that we did this. Okay. I'm going to delete this method because we are not going to keep all the cash flows in under the same column. We will be differentiating all the cash flows under cash flow from operations, CFO, CFI, CFF. And all these together will give me, just give me a second. All these things together will give me my net cash flow for the period. And that is something. Okay. Opening period cash, that is 5,000. Net cash flow for the period, this will give me closing period cash. Let me just check one thing. Okay. This was something that was bothering. Okay. Borders. Give me my closing period cash and cash equivalents. Okay. Now, this is my net cash flow for the period. Where is this net cash flow for the period coming from? Sum of CFO, CFI, and CFF. Total CFF is sum of this total CFI is this, and total CFO is this. Perfect. So any difference that happens over here, I just want that difference to be affected in this part, and that is happening, which means that I have made this part at least correctly. Coming to my cash, hmm, okay. So this is done, this is done, this is done. Okay. Okay. Now, since balance sheet is on date, since balance sheet is on date, I will have to carry forward all of these things, because these are my closing balance, and closing balance for month 0 is nothing but opening balance for month 1. So I will have to add all these things. Similarly for liabilities as well, I will have to do that. And now I am ready to start up with my entry of month 1. Everyone, we have our model now. Just one thing, retained earnings would be this. Just everything is perfect. So if you see KG, how we have done this, how we have made this. This net income will be reflected over here. This net income will be reflected over here in my balance sheet. This total assets will include my cash flow, and precisely cash in the balance sheet will reflect my cash flow, and this cash which is in my balance sheet will again be the part of my total asset. This retained earnings are part of my total liabilities, will be reflected in my total liabilities, and these total liabilities will be reflected, total assets and total liabilities will be reflected in this check line. And that is how I made my model interlinked, so that every element after every entry should match my balance sheet. Everyone clear till this? KG, are you clear? KG, are you clear with this part? Everyone else? GA, PK sir, Apurv, are you guys clear? Perfect. Let's start. Company received cash from clients for services 4,500. Okay. So Apurv, why we have made this is because, so to balance each and every item after every transaction. Apurv, we have made this to balance each and every item after every transaction. Okay. And since in this case study, we have some historical balance, what we simply did was brought forward that balance. What we did is to brought forward that balance, because if, let's suppose you are a businessman, and at the night of the first month of your business, Your closing balance of cash was 1 lakh rupees. What would be the opening balance? What would be the opening balance for next day? The opening balance for next day would be 1 lakh rupees, the closing balance of the previous day. And this is what we have done. We have mentioned the opening balance. We will make some adjustment and come to the closing balance. Have you got this, Apurv? Apurv, have you got this? Okay, which part are you stuck in? Which part are you not getting? Please let me know so that I can help you out with that. Apurv, which part are you stuck in? Last two parts. Okay. So why I have drawn this arrow, I think there you are getting confused, right? Why I have drawn these arrows? I think there you are getting confused. See, net income, what is retained earnings? Retained earnings is net income. Last year retained earning plus this year retained earning. In the earlier sheet, we also did the same thing. We reflected the retained earnings. We reflected the net income from retained earnings. Now you need to understand why always asset and liability gets matched. You need to understand that why always and always, since forever, assets and liabilities are getting matched, because everything reflected in the income statement is connected to, is reflected in liability. Everything happening in the income statement reflected in liability through retained earnings. Are you clear with this? Everything happening in the income statement. So if I add 500 over here, it will be reflected in the retained earnings part. This is what I am trying to say. Are you getting this? Everything happening in income statement is reflected in the balance sheet through retained earnings. Have you got this, Apurv? Everything happened, everything happening in the cash flow statement, everything happening in the cash flow statement gets reflected in the balance sheet through cash. Everything happening in the cash flow statement gets reflected in the balance sheet through cash. Just a second. Net cash flow for the period, and what I want is cash. Everything happening in the cash flow statement gets reflected in the balance sheet through cash. And that is why I have drawn these arrows. That is why I have drawn these arrows. And when these assets are equal to these liabilities, then only my check line gets matched. This is how the arrow flows. Are you getting this? Have you got this now, AM? Apurva, please let me know if you have got this. Perfect. So let's start. Company received cash for services of 4,500. So revenue recorded by company is 4,500 and company has received cash for it. Cash received for services. That is 4,500. My voice is not coming. Guys, is my voice not clearly audible? Guys, are you not able to hear my voice clearly? Okay. CP, there is an issue from your end. Please try to rejoin. Okay. So one of the student was not able to hear the voice. That is why it was essential to let her know. Okay, next. My balance sheet is getting matched. That is clearly. Now, any difference won't be reflected in this zero, but this zero. So it's essential for me to point it over here. Perfect. Now, cash received, done with first one. Company paid to creditors 500 rupees. Paid to creditors how much? 500 rupees. So what will happen? So MK, CFO is nothing but all the cash flow related to operation. Maybe your salary, rent, electricity bill, paid to customers, received from suppliers, and all those things belongs to CFO. CFI only deals with fixed assets. CFI only deals with fixed assets, and rest everything deals with CFO. CFF deals with dividends, that is equity and debt. Equity, debt, paid or repaid or issued deals with CFF, and CFO deals with every other line item, and CFI deals with fixed assets. So if there is no fixed assets, there is no point to discuss over CFI. Okay, paid to creditors 500. Now, how will this impact the balance sheet? I had 2,500 worth of payables. I have 2,500 worth of payables, and out of this 500 have been paid. So that is why the remaining payable is 2,000. Everyone got this one? Apurv, have you got this? 500 was being paid to creditors. 2,500 was the outstanding amount since 500 had been paid. So it will reduce with 500 and 500 cash outflow will be shown. Everyone clear with this? Perfect. Company bought fixed assets of rupees 3,500. Fixed assets worth rupees 3,500 have been bought by the company, plus 3,500 worth of assets have been bought, and assets purchased represents that amount 3,500. Everyone clear with this? Everyone? Apurv, do you have any doubt in this? Please let me know. Apurv, if you have any doubt in this part, please let me know. Apurv, are you able to hear me? Office rent 750 rupees. This is rent expense for me. That is 750 rupees. Rent paid. That is 750 rupees. Company billed client for services on account 5,200. So company has provided with the services of 5,200. Link is not getting opened on your system. So have you joined through the laptop, HT? HT, have you joined through the laptop, and which link are you talking about? I don't know. Are you talking about the Excel sheet? So, and have you joined through the laptop? So once you have clicked on that sheet, you can go to the files and then go to the downloads. There you will be able to find that sheet. You can go to the files and then download. There you will be able to find out that sheet. Company billed clients for 5,200 on account. It means that 5,200 worth of services has been provided, but it is on account. So my accounts receivable will increase with 5,200. Okay. Are you guys done? Everyone? Are you guys clear till here? Supplies were purchased on account 650. Supplies were purchased on account 650. More supplies are being added to the balance sheet. But since this was on account, my accounts payable will increase with 650. Moreover, company hired 2 new workers on 1st June 2019 for yearly salary of 750 each. You will have to prepare a working note. You will have to prepare a working note and give me the salary for the new workers. Prepare a working note and give me the salary for new workers. Solve this one, guys. Give me the values for salary expenses for new workers. Okay. PK sir is saying 75, sir, but this is for next. This is yearly, if you see. This is for 31st December 2019. So, salary expenses per year per person is 750. Number of employees, number of new workers are 2. Salaries per month, this divided by 12. Salary per month per person 62.5. Salary at the end of the day for next, salary for the, okay, one more line item we will add. Number of months work for 7 months. And finally, salary expense for these 7 months. This into 2, 875. Why working note? Because it is essential to follow the process and know that where this 875 is coming from. We could have directly calculated it at 875, but making this through working note would help the reader of the financial statement understand it clearly that how is this being, on what basis the values are calculated. Okay. Next, salary expenses. $875. Salaries, whether it has been paid or not, let's see. Later, for now, let's keep it for payable. Later, we will record whether it has been paid or not. Salaries, payable, 875. Okay, done with this. Company received cash from client billed previously. Okay, cash received from clients 6,000 and account receivable was 7,200. So 6,000 out of which is been received. That is why we will subtract that 6,000. Everyone clear? Everyone clear with this part? Company received an invoice of office equipment repair services from Office Extra for December. The invoice will be paid next month. Repairing expenses worth rupees 850. And since it will be paid next month, 850 should be added in accounts payable. Company paid salary worth rupees 2,700. So salary expenses worth rupees 2,700 is been recorded, and salaries worth 2,700 are paid as well. Sure, sure, AM. Don't worry. I will share the sheet on the LMS. Yeah. So please make sure you raise a ticket about it and get it resolved as soon as possible. Please, AM, I would request, because this would hamper your productivity during the lectures. So I would request that please raise a ticket about it and get it solved as soon as possible. Where were we? Salaries paid. Salaries paid. Okay. Utilities expenses worth 280. Miscellaneous expenses worth 350. Utilities expenses 280. Miscellaneous expenses 350 paid. Yes, these two things are done. Next one is, yes, Priti, you are right. Next one is dividend. My balance sheet is getting matched. Although this method is good to match the balance sheet because balance sheet gets matched after every transaction. But once the balance sheet does not match, and matching it is also a different game. So that is also I really enjoy. If the balance sheet does not get matched and we have to think about various ways to get it matched, it is really helpful for the practice purpose. And this is the method that you can follow as well while making the DCF model for the future projected cash flows. When you will use this method, in that at that time, you won't ever face the challenge of matching the balance sheet. Nevertheless, everything has happened already automatically. Dividends paid. Where will dividends paid go to? What would be the two transaction for dividends paid? Let me give you the first one. Dividends paid worth rupees $550. Okay, still 350. Okay. Yes, formula for CFO is updated now. Tell me dividends paid, it would be 550 over here. Where would be the next entry for this one? What would be the last entry to which I am going to batch my balance sheet? The second entry will be on. Okay, you are correct, Kriti. Correct. It will be the part of equity, dividends, paid, and that would be minus 550. We could have also reflected this in retained earnings, but still, if you want to see what is the amount of dividend that has been paid, this is the amount. So based on this, we are done with this. I will save this sheet and share it with you. Now let me open this sheet again and let me ask you for any doubts. Okay, tell me. Do you guys have any doubt in this? No doubts? Anyone else? Received one response from GA that he does not have any doubt. Anyone else? Do you have any doubt in this? So you guys want more sheets to practice. Okay, let me share you one more sheet so that you can practice. Not only one more, I will share you more sheets if you want to practice it. Ninth one entry. Company received an invoice for office equipment repair services from Office Extra for December. So some of the equipments need some repairing. Some of the office equipment needed some repair. So that was an repairing expense that was incurred by the company. So 850 has been a repairing expense. But since this amount is not being paid and it will be paid somewhat later, that is why we have added it in accounts payable. Have you got this, Kriti? Okay. This one is done. This one is done. Yes, for quiz. Enjoy this sheet. I have uploaded one sheet in front of you. This is that sheet where there is questions also given and solutions has been given as well. A solution is not given to you. The template for solution is been given as well. So make sure you do this. Make sure you solve this sheet. Okay. Solve this sheet and tomorrow we will try to discuss this. So how the interviewer is going to ask you question, for that you will be going to have mock interview sessions. Based on that, you will get an idea that what are the questions that an interviewer can expect you are expected to answer in an interview. Sure, the sheet will also be uploaded on the LMS. So just give me a second. So don't worry about that, KG. You will have your mock interview session, and based on that, you will be getting an idea that are the what are the questions that you are expected to answer in the interview. So the sheet will also be uploaded on the LMS. Let me just get it uploaded now. Okay, the sheet will be uploaded on the LMS. Don't worry about it. So this is the start of financial modeling. This is not exactly financial modeling. So this is one, not start, but this is one part of the financial modeling. Working on Excel and making some calculators according to our needs is what financial modeling is all about. So this is one part of financial modeling. There are other aspects of financial modeling as well. So you can raise a ticket, VM. On that ticket, you will see when you will go to the portal, you will find a section named as Ask a Doubt. And on that section, you can ask me the doubt and we will connect one to one if you have any doubt with respect to anything related to the training part. Sure, AM. Thank you guys. Thanks a lot. So that was it for my side. If you have any doubts, we can wait. Otherwise, we can end the session if you allow me to. Thank you. I hope you enjoyed the session. Waiting for your responses. Please, I am open to feedbacks. If you have any feedbacks for me, please let me know. If you enjoyed the session, let me know as well. Thank you. Thanks a lot. It was really great interacting with you. So thanks a lot, guys. Thank you, guys. Thanks a lot.